Hi, Ken Bates here. I spent 20 years in the Navy, flew an F-14, life was pretty cool, retired as a Navy commander. But since 2004, I've been doing loans and specifically focused on VA loans, and it's become a passion of mine. So much so that I've become the VA chair for the National Association of Mortgage Brokers. One of the things that I've started doing is interviewing other loan officers to see, hey, how is it they focus on VA and how is it they're helping veterans? So that way, everyone can learn from each other. We look forward to seeing you at our VA Loan Officer Superstar Series, and this is our first ever episode. Thanks for being here. In today's episode, I'll be interviewing Justin Grable. In 2018, 45% of his business came from VA, and that represents $20 million in production. Wow. How did he do it? We'll cover that, and you'll get to learn that throughout this episode, along with a couple other highlights that I think you're really going to like. One of which is on work-life balance. Justin has a slightly different viewpoint than I do, and it's great to see different ways businesses run. We'll also wrap up at the end with one of the highlights I think is how Justin combats clients that say, I want to use a different lender. It's an awesome technique, and I think you're going to get a lot out of it. Please subscribe. Please comment below. Enjoy the episode. Hello and welcome to the Superstar VA Loan Officer Series. I'm Ken Bates, VA Chair for the National Association of Mortgage Brokers. Here we're talking about a VA loan officer who's killing it, or specifically where somebody's really helping a lot of veterans make a difference in their lives and doing a whole bunch of loans in the process as well. So it's all about the ultimate result. So I'm here today with Justin Grable. He's been in the industry about 18 years. So Justin, give us a quick background of those 18 years, all of it brokering, some of it banking.
It's been a mix of both. I started at a second mortgage company called Secured Funding back in 2000, and we did just only second mortgages. We did very few first mortgages, and I was there for about a year, and then learned as much as I possibly could. I was working 12, 13 hours a day, 6 days a week, just grinding as hard as I could, and picked up as much as I possibly could. And then went out on my own and started brokering. And I was at Windsor Capital for about 7 years. And then when the market crashed, I went to the security of working for a bank, and I've been banking ever since.
Okay. But you've been an originator pretty much the whole time? You haven't been in and out of sales management or just pure origination, correct?
No, back in the early 2000s, I bought a real estate company, and I had my wife at the time kind of handle that portion of it, but I've pretty much strictly only been a originator from then till now.
Okay. And give us a feel for your origination business. 2018, how many families did you help? How many loans did you do?
I think we're right around 140 for about 42 million.
Okay. And how much of that was VA?
Probably about 20 million of it, close to about 18 to 20 million of it.
Okay. So almost half your business is VA. Now, you're in Temecula, California, which has a couple bases around it, correct?
It does. We've got March Air Force Base to the northeast of us, and we've got Camp Pendleton to the west, and Miramar down in San Diego. So we're kind of like the hub for all three of those bases. And it's a super nice place to live. It's new, got great schools. Everybody loves it up here. And I mean, the traffic alone, you can tell, is a result. But yeah, we have a lot of veterans that want to move up to this area, to the Temecula Valley.
And you're not a veteran yourself, so you're working with a lot of veterans and you don't necessarily speak the language. Some loan officers seem to think that that's a little bit of a disadvantage. Do you find it to be a disadvantage in any way, shape, or form?
Well, my dad was 30 years in the Air Force, so he retired a full bird colonel. So I mean, I definitely grew up in the military. I lived on multiple different bases. Lived in Altus. I was born on Travis Air Force Base. I lived in San Antonio, Louisiana, Oregon. So
okay.
Definitely got around and was around military lifestyle. But yeah, I never served myself.
I flew into Altus Air Force Base once for the weekend, and ever since then I've lived closer to water. So
yeah.
I joined the Navy, not the Air Force or the Army. Yeah, so it's an interesting place out there.
Yeah.
Okay, so you're in a military-centric area. There's obviously some bases around you, but being 40, almost 50% VA, most of your fellow loan officers are nowhere near that VA centric, correct?
No, I wouldn't think so. I mean, I don't pull up the numbers on everyone around me, but I would think that I'm probably doing more than most. I've been lucky enough to align myself with a lot of realtors that are prior military, and they get a lot of clients through referrals from being in the military, and that happens to funnel back down to me. And of course, I do, military loan marketing and stuff like that, and I throw seminars every now and again. But really, it's a combination of aligning myself with the right partners and my location. I mean, Temecula is pretty much one of the best spots you can be if you want to get a lot of VA business.
Yeah. So let's dig a little bit into a couple of those elements that you mentioned there. So real estate agents, about how much your business comes from agents?
90% of it.
Okay.
Quite a bit.
And how many, agents do you have referring you business? Do you have a feel for that?
I probably have about 30, 35 different agents that all send me consistent business.
Okay. And they're sending you pretty much all their business, and they just happen to be VA-centric realtors.
Whatever they can, yeah. I mean, they're referring as much business to me as they can, and if it ends up, I mean, if somebody's been in the military, I don't know why they would use any other loan to finance their home than a VA loan. I mean, the VA loan's hands down the best loan that you can get out there. And yeah, I mean, I happen to run across a lot of veterans, luckily.
Yeah. Well, let me ask, getting 30, 35 agents probably took a little bit of while, and that's everybody's ideal. You've sort of reached that. What did you do to reach that? What do you do to court a new agent and get to number 36?
Honestly, there's no real magic sauce that you can throw on that and say, oh, I did this. I've been out here for 18 years. I've been doing loans ever since. I answer my phone as much as I possibly can. I don't ever like to let it go to voicemail and then check the voicemail and have to call somebody back. It's a waste of time. And I think that over the years of doing business and being available and answering my phone at 10 o'clock at night on a Friday night, or 9 o'clock in the morning on a Sunday morning, and agents realizing that I'm always available and I always get it done, and I never overpromise and underdeliver. I'm always doing it the opposite way. I'm always telling them it's going to take 25 days rather than it taking 15 and then it taking 20. If I tell them 25 and it closes in 20, I'm a hero. If I tell them 15 and it closes in 20, I'm a jerk. It's the exact same result, but just different expectation. I think that over the years, the agents have real estate's a very tight-knit community, and you make one mistake and that could really screw up your whole career. But if you are consistent with answering your phone and getting the job done and under promising and over delivering, you're going to build up a pretty good reputation. And
Sweet.
Luckily that's what I did.
So of those 30 to 35 agents, how many have you had only a year or two? I mean, how many are you regularly adding to your referral database?
My goal per month is to meet with 3 new agents per month. Sometimes it's more than that, sometimes it's less. But you've got to just constantly be going after it. You've got to be setting up lunch appointments and coffees and happy hours and whatever you can do to get yourself in front of new agents and somehow show them why they should be using you.
And what is it? Do you have I don't want to say a script, but what is the unique selling proposition that you bring in when you meet that new agent?
Honestly, just always available.
Okay.
I don't have working hours. If I'm up and my cell phone's on, I'm working. My wife doesn't like it, but she gets it. She understands.
I have a question about that later, but we'll get to that one. So somebody that's doing awesome, 30 to 35 referral partners, but yet you're still out prospecting going, I know I need to add more. Definitely something that some people think that you reach a certain happy place where you can just coast. Not the case, is it?
No, I mean, you have to constantly be growing and expanding. Otherwise, you just get complacent, and before you know it, everything starts falling apart.
Yeah. Yep.
That was one of
So now with 30 to 35 referral partners, what do you do to maintain those relationships? And let me caveat that with a second of what we're finding in today's market, and we're recording this in January of 2019, is the agents that spend a lot of time with you, some of them don't want a whole lot of hand-holding, take me to lunch once a week. It's just get my deals done. And
Yeah.
some agents are exactly that of, hey, if you're not texting me on a regular basis, I feel neglected. So
Yeah.
what is your experience with your agents?
Exactly what you just said. I mean, some of them are just, they are 100% on board with me. I don't ever have to call them or text them or talk to them, and they just constantly send me business. But those are ones that I'm usually end up being pretty good friends with, and we're either out golfing or doing other things where we're not even talking about work, but we're still spending time together. And then there's other ones who, I try to do at least 2 lunches a week with a referral partner, just to kind of stay in front of them. I throw happy hours every couple weeks just to kind of get everyone together and just have some drinks and have a good time. But I find that people are either going to like you or they're not.
Yep.
And it doesn't matter whether you can close a loan or not. I mean, obviously that matters, but all of us can close loans. I mean, it's not like I got some special secret to get VA loans closed. Everybody can close them pretty much. And you're going to get referrals based on whether people like you or not. If you're honest, you're upfront, and you get it done, you should be able to get some pretty good repeat business from realtors anyways.
So the habits that I hear you talking about, so you're trying to meet with 3 new agents a month. You're having 2 referral partner lunches a week. So you're spending a lot of time out prospecting, not necessarily just in the office, cranking on loans, correct?
Yeah, as much as I can. If I'm in the office, I'm not making money. If I'm out of the office, I'm making money.
Okay. What do you have for support? A lot of people out there aspire to do 40 million a year in volume. Do you have somebody setting up your files? Do you even take your own loan applications at this point? How do you divide up that workload?
Well, I try to push everybody to do the online application, because through the online application we have day one certainty, which is where the application can actually verify income and assets right there through the application. So I try to get everyone to do the online application. But I do have a junior LO who sets up all the files, runs credit, gets all that stuff, sets it up as much as they possibly can before sending it to me to review and then send out the pre-approval. And then I've got a dedicated processor as well.
So let's talk about the junior LO. How long have you had that person, and who's done the training for him?
I've had a junior LO for like the last, 6-7 years. I've had this one for the last year and a half. He started with me in July of 2017, and he had been in the business for maybe a year prior to that. And he was a junior for someone else. Okay. And he and I had become friends. We go to the same gym, and eventually I pulled him away from the other guy.
Okay. So in terms of training him, he showed up with some general knowledge, and you've just been polishing it since.
Yep, exactly.
Okay. Didn't have to take somebody from green to 100 miles an hour.
No, although I have done that before, and that's a little rougher, but it's doable.
Yeah. So when we talk about VA loans in particular, what is it you see other loan officers messing up about VA loans?
The 2 biggest things that I see the most of is not calculating the residual income when they're doing the pre-approval. Most people will just get the application and then they'll run it through DU, and they won't actually put in the other stuff that you have to add for the residual. Right. And most of the time it's not an issue, but I've seen a few cross quals where I've done where they didn't have it in there and it was really tight, and once you added those things in there, it didn't work. So I mean, I see that a lot. And the other thing is calculating secondary entitlement. A lot of people don't realize that if you've already used your VA loan, you can get a second VA loan based on secondary entitlement. Mm-hmm. And you have to do the calculation on the VA worksheet. But what I also do is I always call the Phoenix Regional Center and I have them give me the secondary entitlement amount for each client that I work it up on, just to make sure that my calculation is correct. So I do see that quite a bit too, where they don't calculate the secondary entitlement correctly.
Yeah, back to that first one. It's amazing to me how many loan officers who are used to being DTI driven and DU or LP driven that they just fill out a 1003 and go, do I have a workable file or not? Without digging in and going, hey, you know what? I need to look at whatever, we happen to use Paycheck City, but, hey, what are the taxes and what are the, Social Security and other reductions going to be that are on that loan analysis, 6393, whichever one you want to call it, because that is really the meat of a VA loan. If you don't know what your residual income is, you don't know if you have a doable deal.
Yep, exactly.
So
I use Paycheck City as well.
I think it's relatively an industry norm. I think there's some others that are out there, but it seems to be the most popular.
If that's what my underwriter's using, I'm going to use the same thing.
Underwriters and investors, we all get to deal with that same food chain. Gotta love it, right? So all of us are dealing with lender overlays, and we're seeing those become less and less and less. If you had advice for the end investors, what lender overlays would you like to see go away?
The credit score overlay. I think that on a VA loan, that's one of the benefits that they've earned. And I think that they should go by whatever the DU will approve. A lot of lenders I see that will just do a hard stop at 620. We currently don't have a FICO score requirement. I mean, if we have a DU approval, we'll do it. But I do see a lot of people out there that get hung up at I mean, I've seen some big banks at like 640, which is just crazy.
Yep.
There's a lot of good deals in there where they make plenty of money to afford the house, and it's just their credit score is not quite there. So then that's a big one. And then the debt to income ratio. I mean, if I've closed VA loans at 75% debt to income ratio, but it's because they had a ton of assets left over after we closed, and DU liked it. I've seen a lot of lenders that just stop at 50 or 55% no matter what. And I think that's really doing a disservice to the veterans for sure. Yeah,
that one's we see a lot where there's a undocumentable income that just doesn't show up on the 1003, for example, GI Bill income, where you sit there and go, this person's DTI is at 62%, but I know in reality it's nowhere near that high because of that, or there's something else going on. It's just hey, the trailing spouse doesn't have that job yet, but they're an RN, and a nurse is going to get a job, but they want to buy the house, get moved in, get the kids in school, and then go get the nursing job. So it's like, well, I can't blame you for doing it in that order. That's the order I would want to do it in. And if we can push it through at 62% DTI or something like that, it's often something that makes sense, because it's really frustrating because a client goes to that big bank, they have a 638 credit score, and the big bank says you can't get a VA loan, and they go back and go rent instead of getting a second opinion or digging around and going what's really out there, what's not out there.
Yeah, exactly.
So,
and I think a lot of loan officers, at least I did for the first part of my career, I think that they try to battle too much with underwriters. And if they would just approach it with a different attitude and realize that, the underwriter's on your team and they're there to help you get the file approved rather than argue with you. And I think that if you approach it, with them to where you can say, well, he does have the GI Bill income. Could we possibly use that to offset some of his other debts?
Yep.
And that is allowed. But if you're a jerk to the underwriter, they don't have to allow it, So I think it just depends on how you're asking for it.
The VA gives the underwriters a lot of discretion. So yes, do collections get paid? All those other type of things. When you have that nice working relationship and you have an underwriter who has that can-do attitude, it makes life a lot easier. And if you're at a place right now that you don't have that, then
good luck.
Yeah, exactly.
But also do look in the mirror and go, am I triggering some of this? Because yes, there's definitely, I've certainly seen real estate agents where they fight every little battle they can for the client because they believe that is their job. And in the process, they make a lot of enemies. And if you're in a huge town, I'm in San Diego, sometimes you can get away with that because you're a real estate agent and you're not going to stumble across that other agent for another 6 years. But if you're in a smaller town where your reputation matters, you might win the battle and lose the war.
Yeah, exactly.
So when you're at a company and you're working with underwriters, you might win that battle, and the underwriter might go, fine, you got the supervisor or the owner of the company to say yes, but you're on my short list now.
Yeah. Yeah, exactly.
Yeah, they're all human too. So when you're talking with veterans, what do you find that they often come to the deal with bad misconceptions? What is it they're coming in with bad information?
A lot of times they just think that they're not going to qualify, and I try every time to get them to just stop thinking that way. And if you don't qualify right now, give me 3 months to 6 months, and I'll make sure that you do qualify within that time. I mean, there's always ways to get around it, unless they just don't have the income. I mean, if it's just credit, we can clean that up pretty quickly. And I think that the biggest misconception is that they're not going to qualify. And the other thing that frustrates me so much is how often I see veterans who have been living on base for like the past 2 years. And I'm like, oh, you're basically throwing away the government buying you a house. I mean, there's money that the government's giving you every single month to pay for your home, for you to own the home. And when you're renting or just staying on base, you're just throwing that money away.
Yes, there's definitely a bunch of people out there that say the opposite of, well, you're in the military, you're moving all the time, you shouldn't buy a house. And it's one of those conflicting messages our veterans get of, hey, my phrase is monopoly for the military. How do you win monopoly? It is not by going past go. It is by buying every stinking square you land on and then renting it to somebody else. So if you were in the military for 20 years and you have 5 duty stations, if at the end of that you own 5 houses, holy cow. Yes, number 5 might not be all that sexy, but number 1 is probably almost paid for. And renting at an awesome, cash flow rate. So
exactly.
It's definitely an opportunity.
Yeah, it's just getting them to see the bigger picture, not just the here and now.
Okay. Yeah. Now, one thing I noticed about your business is you've spent a lot of time. It looks like you've started doing Zillow reviews back in 2012. And you now have 155 Zillow reviews, 4.99 stars. It looks like one client gave you 4 stars, even though he said you were great.
Yeah, and I think that was just a mistake, hopefully.
What is your recommendation? Obviously, it's been something you've been focused on as part of your business. What is it you do to get all those Zillow reviews, and any advice that you would give on somebody else trying to follow in those footsteps?
Honestly, you just have to ask for them. I mean, nobody's going to leave you a good review. People will only leave a review when you make a mistake and you've done something wrong. If you do something great, well, it's your job. That's what you're supposed to do. You're supposed to do it great. They're not going to go out of their way to leave you a review unless you ask for it. And I see so many people that just don't ask for it. So I mean, yeah, I've made it part of my process at the end to ask for a review. And I mean, I haven't offered any incentives to leave reviews, although I've heard a lot of people doing that and they get quite a bit. But I've just asked them at the end of the review, and I just ask if they'd leave me an awesome 5-star review on Zillow. And I just recently started doing Yelp, kind of kicking myself. I don't know why I didn't start asking for those as well a long time ago. But it takes time to build up your reviews, and I would say it's one of the biggest things that have helped my business over the past 5 or 6 years. When you have 155, 5-star reviews, it makes it really easy to sell yourself.
Yep. Somebody's already sold you for you.
Yeah, exactly.
People don't even have to think. So yeah, that's awesome stuff. Now, you mentioned earlier the family and the wife and that type of stuff. You have a wife, you've been married for 9 years, and you got 2 kids at home, correct?
Correct.
Okay.
13.
But the answering of the phone, how, the magic here, how do you integrate family and work?
It's hard. I mean, there's again, there's no magic sauce. You just have to be present as much as you can when you do have that family time, and you have to set the expectations with them to let them know that, unfortunately, I don't have like a doctor's job or a lawyer's job where I have specific working hours. I mean, my job is sales, and I have to be available, or that's a sale that I might not make. And they understand that. If it's if my son's right in the middle of explaining something from school, I have a text message on my phone set up that says, I'm on the line, I'll call you right back, and I'll send that text and I'll call the person back within a few minutes.
Okay.
But you just try to give them as much of your attention as you possibly can when you're with them, and then when work comes in, you've got to just handle it. I mean, some people are gone 8-10 hours a day. I can work from home. Whenever we go on vacation, I'm still working. I don't ever like unplug. I could never go for like a 7-day vacation where I don't have any access to anything. So it's a give and take. And, luckily I've got a very understanding, awesome wife, and my kids have seemed to grown accustomed to the fact that I might be on the phone at 8 o'clock at night, in the middle of dinner.
Now, do you have any boundaries with your agents of, hey, you know what, after 9 p.m., don't expect me or anything else like that, or have you truly thrown it out there of I'm at your availability?
I don't have any boundaries at all. I mean, if they send me a text at 9 o'clock at night, I don't have to answer it. Or if they give me a call, I don't have to answer it, but I typically always will.
Okay.
I mean, I've been out in Old Town, partying on a Friday or Saturday night, and I'll have a call come in at 11 o'clock from an agent, and I'll run outside real quick to answer it. And I don't have to do that, but
right.
That 2 or 3 minutes that it takes me to go out there and answer their question just helps out so much more on future deals when they know that they have somebody that they can get a hold of at any time. I could very easily just say, hey, I can't answer right now, sorry, and call them back in the morning. But really, did it really interrupt my night for walking outside for 2 to 3 minutes to answer their question and make them at ease? I mean, I like to say that I work when you work. So if you're up at 11:30 at night working, I'm working too.
Yep, that's a way to do business. Just for people watching, the loan officers that work for me, we actually go the opposite route, which is one of my loan officers went on vacation for 3 weeks to Turkey, and I told him if he checks email, he's in trouble. Told his wife the same, and he had his best month ever. Nice. So it was one of those things that something we do to intentionally cover for each other. Because unplugging sometimes is a good thing to help you disconnect. But Justin's killing it, and where we've told agents, hey, you know what, I'm available up until 8 o'clock at night. Maybe that's cost us 1 or 2 relationships. So this is where anybody who's doing their business, it's always a trade-off.
Yeah, definitely.
What makes sense here, and in the world of chasing real estate agents, there's certainly a lot of gurus that say, you should go after the top agents, you should do this, you should do this to earn their business. But what they don't say is once you've earned that top agent's business, you have to stay on top of the mountain because there's a whole bunch of other loan officers climbing up that mountain trying to take you off.
Yeah,
so
exactly.
If that's the business philosophy that you're following and you're not available on that Friday night to answer the quick call or to at least send the text back that says, hey, I'm out in town, you really don't want my incoherent response right now, let me text you in the morning, or whatever it happens to be, just something that says, I acknowledge you, I'll be there for you, because if you drop that ball, somebody's ready to pick it up.
Yep, exactly.
Somebody's always waiting in the wings. So
Definitely.
okay. I also saw that you're involved with some charities. How have you parlayed those charities into your loan business?
I'll be honest, I don't really advertise it because I think it looks kind of slimy when you're sitting there saying that I donate money to charity on every deal or something like that. I donate money to charity because I like to, and it makes me feel good. I don't do it to get more business, but one of my real estate partners created a chapter of Impact Club, which is it's not really a charity because they're not a charity, but what they do is they bring 3 different charities together once a quarter, and you get as many people as you can to join the Impact Club, and we all show up once a quarter to a destination here locally in Temecula, whether it's a winery or a restaurant or whatever. And 3 different local charities from the Temecula area basically give their storyline as to why they exist, what they do, who they help, and whoever has the best story engine wins $100 from every single person that's in the Impact Club. I think currently we have like 180 members, and every quarter, all 180 of those donate $100 to whatever charity wins. So every quarter we're giving anywhere from like $15,000 to $20,000 to a local charity here.
Wow.
And that's just a really cool way to give back to a community that's been awesome to me over the years. Sorry, I keep looking out that way because Temecula's right out there.
That's why some of us, with the National Association of Mortgage Brokers, we give back because this industry has been amazing to us. And it's one of those things that, hey, you know what? There's not a whole lot of other jobs that you can do what we do, work from home, do that type of stuff, and have the benefits that we do.
Yeah, exactly.
Sweet. Last thing is, in terms of Facebook posts, it looks like you've done some marketing there, or at least you try and stay somewhat active. Is that intentional, or is that just something you do on the side, or talking about your online social media presence?
I could definitely do more social media marketing than I'm doing. I stick to the 95-5 rule, where 95% of my posts are family, friends, things like that, things that people actually, the people who are actually friends with me want to see, and then 5% business. I definitely don't want to bog my social media down with just all business stuff. But that's definitely something I plan on changing this year. Whether it's getting my own mortgage-related page and boosting that and trying to get business in that way, or just doing it more on my personal page and maybe changing it to 80-20 or 70-30. But I could definitely be doing more of that.
Sweet. Well, that leads us into the wrap-up stuff of what is the future for you? What do you see our industry, and what do you see for yourself over the next year or two?
I think our industry is going to consolidate. I think there's going to be a lot of people squeezed by the higher rates, and it's, again, rates are very relative. Been doing this for 18 years. I've seen rates much higher than this, and I've seen rates much lower than this. But it's kind of funny when I talk to clients and I quote them a 4.5% rate, and they're like, "Oh my God, it's so high." I'm like, compared to what? Compared to 2 years ago, yeah, it's high, but compared to 10 years ago, it's low. So I see that I think that there's going to be a lot of consolidation from the big banks and the other smaller players in the industry, where they're going to be losing a lot of the people that are doing 1 or 2 loans a month, and they're just barely scraping by. And now with rates going up, they're probably losing most of their business. Right. So I definitely see some consolidation. I think that rates are going to continue to go up. I don't think they're going to come back down. But but yeah, I mean, it's kind of a crazy business, and to say that, for sure one thing's going to happen is not the right way to go, because it's definitely been a fickle market and a fickle rate market. But I do think that we're on the verge of rates going back up to the 5.5%, 6%.
And most of your business comes from real estate agents right now. Are you finding that is becoming harder, or where do you see that going in the future?
I see that being one of the main sources for business. If you don't have referral partners and you're just trying to go at it on your own, it gets hard, because when a realtor is referring their client over to a loan officer, it provides that instant trust and that instant what's the word I'm looking for?
Credibility.
Credibility. Thank you. Instant validation that you're working with somebody that the real estate agent trusts. So why shouldn't they? And it's really hard to establish that trust if you're just doing like online leads or Zillow long form or anything like that. So I would definitely recommend to anyone out there who's not going after real estate agents to start, because it's a lot easier lead than cultivating one on your own and then trying to win that trust. And then once they do end up with a real estate agent, that agent's most likely going to refer them over to their preferred lender anyways.
Right.
So
are you finding that the agents are being less influential in the process? And by that, I mean, 10 years ago, a real estate agent told the clients, hey, go use Justin. And they said, fine. And nowadays they're like, well, I have online, or I'm already pre-approved. Are you finding that the clients are changing a little bit, and what are you doing to combat that?
Definitely. It is definitely getting harder to win clients just off of the referral. And I use my reviews quite a bit to combat that. When they're dealing with some online lender in Kansas or Atlanta or something like that. And I mean, I hate saying this, but it's the truth. I mean, when you're working with some lender that a local agent has never heard of, it makes it a lot harder for those offers to get accepted. Like I said, I mean, this is a very small community. We all know each other. And when you're coming in with a pre-approval from a lender that nobody's ever heard of and they have no reviews, it makes it harder to get your offer accepted. Like if you have one offer here from me and another offer from someone else, and the offers are similar, the listing agent's going to always choose the one from me because they know me.
But you have explaining that to a first-time home buyer,
it's hard.
engineer, rocket scientist who says, I got online Bob's discount loan shop ready to do my loan. As you said, it's hard. I didn't know if you had any scripting or how.
Yeah, I've got screenshots from over the years of listing agents locally here who have answered Facebook posts. We have a Facebook page here called Temecula Talk. It's got about 60,000 people in it. And whenever somebody goes on there and posts a question about, what lender should I use to buy a home, there's a lot of listing agents that will respond and say the best advice I can give you is to go with a local direct lender who has great reviews. And I have like 5 or 6 different screenshots of that from all different realtors, and I send those screenshots to the client. I used to work for a company that guaranteed the lowest rates in the country every day, and they pretty much always had them. But it was really difficult to get a loan closed. And going back to the overlays, they would not go over 50% no matter what. So, I mean, I remember the last deal that I lost because of them was it was a VA loan, and it was a 760 credit score, 54% debt to income ratio. Like, it was a perfect loan. There was no issues with it whatsoever, and they wouldn't do it no matter what. Didn't matter how much assets he had. It was just so frustrating. And so now I use those experiences and I say, look, I can offer you 1%, but if I can't close the loan, what does it matter? So And again, like, I mean, there's a lot of times where you have someone who's just so rate sensitive that that's all that they see. And it doesn't matter how good my reviews are. It doesn't matter how good my deal is.
So-and-so's $302 cheaper on a $700,000 loan.
Yep. And you've got to just let those go. And if they end up closing okay, you know, great. But if not, just tell them that, hey, look, if anything doesn't pan out, I'll be here waiting for you, and we can get it closed for you. Best of luck. And you just got to let them go.
It's one of the luxuries of having lots and lots of business, is letting people go is a lot easier.
Yeah.
And it's a glorious, happy feeling when you go, my time is worth more. If you're not my client, you're not my client. Thank you. Goodbye.
I had a conventional one about 6 months ago who got an offer from lenda.com, lenda.com. I'd never heard of them. I pulled up their numbers, and they have closed like $256 million since like 2014 when they opened up. I'm like, $256 million in 4 years, that's nothing.
Yes.
You know? For an entire company, that's nothing. For an individual loan officer, that's quite a bit, but this was for the whole company. And I did everything I could to point out all of their flaws. And they quoted them, it was 1% lower in rate than what I could get. And I was just like, there's no way that they're going to be able to do this. And sure enough, 3 weeks later, Linda ended up changing the program on them and trying to bump the rate up and saying that they had to do an FHA loan, and they didn't. And they came back to me 3 weeks later, and we got it closed in about 2.5 weeks after that. So, but yeah, I mean, there's little stories like that. And
yep.
Whenever I have that happen, I have that client send me an email basically detailing that so that I can show it to future clients. You know,
that's brilliant. I love the third party stuff of, hey, here's other real estate agents saying, you know, I'm not accepting your offer if I don't recognize the lender. And it's not me telling you that, you know, this is the way this is going to work. This is the people that are going to be reviewing your offer saying this stuff. So you don't have to listen to me, you listen to them. And oh, by the way, if you use, you know, that bank, and you write 14 offers and you don't get accepted 14 times, you know, you're the common thread, or more importantly, that pre-approval letter with that bank's name on it is that common thread.
Yeah.
But unfortunately, sometimes it takes 14 times for a client to finally go, okay, he was right.
Yeah, and we've had that happen before too, where you know, they went with the lower rate, and this is just at the pre-approval stage, and they wouldn't even get pre-approved with me because the other company had such a low rate, or they didn't work with them for a while, or whatever. And sure enough, 10, 15 offers later, and the agent's like, you know, look, why don't you just get pre-approved with my guy? Let's just see what happens with his pre-approval. They say okay, and 1 or 2 offers later, and it's accepted.
Yep.
I mean, I don't like that part of the business. I mean, but it is what it is. I totally understand it. Agents want to work with somebody that they know is going to close the loan. I mean, that's the lender is hands down the most important part of the transaction. If the lender doesn't perform, you have a risk of losing your deposit. The agents don't get paid. The seller of the house is not getting the money that they thought that they were going to get to buy their next house. You know, it all rides on the lender's shoulders. So
the way a friend of mine described it, he said there's 4 reasons a deal falls through: the loan, the property. So.
Very true.
All right, wrap up stuff here. Any other advice you would give to loan officers or veterans themselves when it comes to a VA loan, either to grow your business or to maximize this amazing benefit the veterans get? Well,
to veterans, I would definitely say use your VA loan as soon as possible. Stop renting. Stop living on base. I mean, the government is offering to pay for your home for you to own it while you're an active duty military veteran. And as long as you're not using that, you're just throwing the money away. And it's your money. You've earned it. definitely start using it as soon as possible. And definitely don't think that you won't qualify, because you most likely will. And for LOs, the VA loan is hands down the easiest loan to get done. It's the most lenient credit and debt to income ratio wise and assets wise. Once you figure out VA loans, you'll realize that, wow, this is the easiest loan that you can possibly do. And just take care of them. Answer your phone, get back to them as fast as possible. Realize that they work probably the same hours that you do, so a lot of their communication is going to be after hours, late at night, and just realize that that's just part of the job.
Sweet. Well, I appreciate you sharing all this information and giving us a role model to follow. $40 million a year. Hope you hit that next year and then some. And that you continue to help a whole lot of veterans that are out there.
I appreciate it, man. Thanks so much for having me on.
All right. Thank you for being with us.
All right.
Bye.
Hey, I hope you got a lot out of that episode. If you did, please comment down below or subscribe so you can see our future episodes that are coming out. We also have a VA Fact or Fiction. You'll see those as well. If you have any questions, please reach out. We're happy to help. The information's on the screen. I'll see you at the next episode.